Welcome to another video from Creativo Solutions. You're currently watching the Accounting for Non-Accountants video series. Please post comments and questions below, tell me what you're struggling with and I'll create the video to help you. Please subscribe to the channel and you'll be the first to know when new videos are uploaded, and visit the website for more content and resources. Disclosure is about representing information, and here we're focusing on the adjustments. So far we've looked at 3 adjustments. This is the 4th adjustment, which we're now going to cover. How long is the financial year? 12 months. Do all transactions always relate to the financial year? The answer is no. So when processing adjustments, we're trying to make the statements more accurate by reflecting what actually happened during the financial year. Understanding the accounting rules are so important because processing adjustments requires good knowledge of the rules to then create the actual debits and credits. In case you forgot the rules, don't forget to study them, know them, and then practice applying them. These are the 6 rules that you need to be familiar with for success in accounting. Transactions are always recorded when they arise. Remember, we're focusing on accruals, so the accruals refer to income being earned and expenses being incurred. When we have a financial statement, we're reporting on the 12 months. Transactions can either relate to the period during the year, before the start of the year, or even after the end of the year. Our accrued income adjustment. We know that income can be earned during the financial year. So in this particular example, we earn income during the financial year, but we don't receive it yet. So remember, I'm focusing on the 12 months. When am I going to receive this income? Well, it'll be in the future. Currently, I have an amount that has been earned that hasn't been recognized in the current financial year. I need to show users what I've earned during the financial year, not only what I've received. If I'm looking at what has been received, I only would have received 9 of the 12 months. 3 months in this example is outstanding. So you've rendered a service, or you've sold a product, or you've done something that has generated income, but it hasn't been received yet. It'll be received in the future. So if 3 months are outstanding, can I only show 9 months in the financial year? Well, the answer would be no, because you've earned it. You've rendered the service, or you've given the products for that particular period of time. So for the 12 months, I need to show 12 months worth of income that has been earned. So if you've earned the income but you haven't received it, you're going to create an adjustment called accrued income. Transactions will be recorded when they occur, so when I earn the income, I need to record it in the accounting records for the books of the business. We have accrued income here, and the key note is similar to debtors or receivables. That's the best way of remembering what debtors is. Think about it as income that you've earned for the period that hasn't been received. So what effect are you going to have on the elements? Well, let's think about this. You've earned something that you haven't received. Does it meet the definition of an asset? Well, yes. It's a resource you control that's going to give rise to future economic benefit. So now we know what the account is. Accrued income is an asset. If we're creating an asset, we then need to think about our rules. The rule says an asset account will increase on the debit side. So I need to record the accrued income on the debit side because I'm creating it. And if I think about the income, well, is my income too high or too low? Well, let's think back to the example we looked at. There were 3 months that you haven't received income for. Have you earned the income? The answer is yes. Have you received the income? The answer is no. So am I going to add an additional 3 months to income? Yes, because I've earned it, but I haven't received it. So income is actually understated. Understated meaning too low. How do I then increase income? Well, I credit to increase it. So the important rule says income must be credited to increase it, i.e. I'm recognizing more income. I'm focusing on increasing it to represent the actual income that has been earned for that period of time, the 12 months, which represent the financial year. That takes us to the end of this video. Thank you for watching. Please hit the thumbs up button to like the video and subscribe to the channel. And if you have any comments, please post them below and I'll create videos to keep helping you.